Hi there, I'm Ryan Capascio, co-founder of Simplicity Trading Systems, where we create simple and easy to use trading strategies for investors and traders alike. In fact, we're traders ourselves, so we know how hard it can be to predict how a stock is going to move and when it's going to happen, which is why we've partnered with Metastock, the award-winning leader in charting and technical analysis software, to bring you the Endeavor add-on for Metastock. Now, over the next 20 minutes or so, I'm going to show you how to improve your trading by slightly changing the way that most people approach it. Keep in mind, Endeavor doesn't tell you how to trade, rather it helps you predict how price is going to trade. So stay with me as we begin with the almighty question. Where do I start? With our simple 3-step system. Categories, step 1. Identify the big picture movement. Color codes, step 2. Identify the correct upward movement. Smart Getouts, step 3. Identify the right time to exit. Let's break these down and go through them one at a time, starting with categories, step 1. Identifying the big picture movement. And this is how it works. After you've selected your security, we categorize price as Endeavor or Discovery. The Endeavor category represents potential upward trends that could reach their all-time highs. However, the Discovery category represents potential downward trends that are likely to consolidate at lows. With these classifications, you'll be able to tell at a glance if price is more likely to make upward or downward trends. Today, we're going to focus on the Endeavor category, potential upward trends that could reach their all-time highs. Inside Metastock, all you have to do is type in the ticker symbol that you're looking for. When the chart comes up, simply apply the Endeavor and Discovery template and a ribbon will appear on the bottom of your chart, identifying the category the price is in. When the ribbon turns to light gray, it represents the Discovery category, and when it turns to dark gray, it represents the Endeavor category. Now, just so we're all on the same page, every chart you'll see is a daily bar chart, which means every bar in the chart represents one trading day. We recommend that you use daily charts with the Endeavor add-on. Got it? Okay, moving on. Let's break this chart down into individual categories. Although we are focusing on Endeavor, it's still important to understand the basics of both categories. You can see here, when price was in the Discovery category, it trended down to a low and then began to consolidate, just as you would have expected it to, since that's what the Discovery category represents. Potential downward trends with consolidation at lows. You've no doubt heard the phrase, buy low, sell high. Well, now you'll be able to tell if a stock is so low that you should just stay away from it altogether. Here, I'll show you some examples of downward movements that it will be impossible for you to get stuck in if you use the Discovery classification. This is Chipotle, ticker symbol CMG. Its price moved into the Discovery category back in November of 2015, and since then has fallen more than 36%. And if that wasn't bad enough, it spent the last 12 months in consolidation, bouncing around at its lows, tricking people into thinking that it was going to take off when it had no chance of doing so. But with the Discovery classification, you would have immediately known back in November that price was not going to move up anytime soon. Or how about Twitter, ticker symbol TWTR, whose price entered the Discovery category in May of 2015 and has since fallen more than 53%. Imagine how it must have felt being in this trade as price sunk more and more every day, eventually just consolidating at its low. Now, believe it or not, there is still hope for these stocks. In fact, that brings me to my next point. Just because a stock's price is currently in Discovery doesn't mean that it'll stay there forever. That would be ridiculous. Price can move out of Discovery and into the Endeavor category, and this is when things really get exciting. Notice how as soon as price enters Endeavor, it started moving up. That's because the Endeavor category represents price having potential upward trends that could reach their all-time highs. Here, let me show you some examples of the kind of movement Endeavor can identify. This is MasterCard, ticker symbol MA. Its price entered the Endeavor category in August of 2016. then moved up over 24% and made new all-time highs. Now that's the kind of opportunity we're looking for. Then there's NVIDIA, ticker symbol NVDA, whose price entered the Endeavor category in August of 2015, and since then has made over 480% and is still making new all-time highs. Now, I know, this is an extreme example and won't happen every day, but it did happen, so I had to bring it up. And while we're on the topic, here's a fun fact. Every stock that has ever exceeded its all-time high has done so while in the Endeavor category. So, think about that for a while. And that's it for step 1. That's all you have to remember. When price is in the Discovery category, you can expect potential downward trends with consolidation at lows. And when price is in the Endeavor category, you can expect potential upward trends that could reach their all-time highs. Okay, by now I think you have a pretty good grasp on the categories. So here's a pop quiz. Inside Endeavor, what kind of upward movement will price make? Time's up. Turns out there's more than one answer. So it's kind of a trick question. Price can make a few different movements, which brings us to color codes step 2. Identifying the correct upward movement. And this is how it works. Inside Endeavor, colored signals represent the movement most likely to occur. Now you can predict future movements without having to interpret indicators. We've identified basic movements that price will make while in the Endeavor category and labeled them with colored signals, making it easy for you to recognize them. Each signal will appear as an arrow located below price action. Green signals represent long-term trends. Blue signals represent short-term trends. And black signals represent price making a rebound back to highs. With our colored signals, you'll be able to predict how price is likely to move within seconds of looking at your chart, saving you valuable time since there's no indicators to interpret. Let's take a quick look at a chart so you can see for yourself what the signals look like. Notice how our charts are simple and clean. We show you the Endeavor and Discovery ribbon on the bottom of the chart and our signals below price action. We don't squish price together with endless rows of indicators, making it virtually unreadable and filling your chart with clutter. However, signals are only useful if you know the right price to enter the trade at. Otherwise, even with a signal, you're still just guessing at the right entry price. And this is where Endeavor really gets good. You no longer have to guess when the right time to enter a trade is. All of our signals come with individual trigger points shown in the commentary section. But I'll go over where to find them later, because right now you're probably thinking, what's a trigger point? Well, simply put, trigger points provide the exact price that needs to be crossed to confirm the signal. Gone are the days of jumping into a trade just because price took out the last bar's high. That one-size-fits-all approach is now a thing of the past. All of our trigger points are customized to fit the specific security that you're looking at. Here, I'll show you. I'm going to use a blue signal for this example. As you can see, our trigger point is 1056. So, if price crosses the trigger point, we can expect a short-term trend. Because, if you remember, that's what the blue signal represents. And the next day, price crosses 1056. So the signal is confirmed. Now we instantly know two things. 1, it's safe to enter the trade, and 2, that price is going to make a short-term upward trend. Now, trigger points also work the opposite way. For my second example, I want you to pay close attention to the high of the signal bar. You can see our trigger point is 2209, and it's slightly higher than the bar's high. Watch when I move forward in time. We can see that although price did take out the high of the signal bar, it did not take out the trigger point. So the signal is not confirmed, and we see how price fell. But price falling doesn't matter to us because we knew not to enter the trade since the trigger point wasn't crossed. I've seen price come 1 penny away from crossing the trigger point and then turn around and tank. But I bet you're ready to see some real-life examples of how the signals and the trigger points work. So let's jump right in, starting with the green signal. For those of you interested in identifying long-term trends, pay attention, because your analysis process is about to get a whole lot simpler. Just bring up your chart, This is Progressive, ticker symbol PGR. Apply the Endeavor Green Expert Advisor, and when the criteria is met, a green signal will appear on your chart, along with the Endeavor and Discovery ribbon. Remember, the dark gray area represents the Endeavor category, and signals will only appear in the Endeavor category. You'll also receive an alert box, reminding you what this signal represents and to check the commentary for the trigger point. So, we'll bring up the commentary. Notice how our commentary is simple and easy to read. You're given the definition of green and the criteria needed to confirm the signal. Green signals are a little different than the rest. They need 3 consecutive closes above the trigger point to confirm the signal. You'll know you're confirmed when you get a green 3 icon on the chart above the trigger point. The trigger point in this example is 33.27, which I'll label on the chart with a green line. Now, I'll get rid of the commentary and wait for our green confirmation signal, which in this example takes 7 days to occur. But when you see the green 3 icon and the green confirmed alert box, that means the signal is confirmed. It's now safe to enter the trade, so hold on tight because price is about to make a long-term upward trend, which lasts for multiple months and made over 19%. In fact, since we're talking about what green signals can do, remember MasterCard? It was the example of what can happen when price enters the Endeavor category. Well, it had a green signal as soon as price entered Endeavor, and once it was confirmed, that's when price made over 24%, making new all-time highs. And we can't forget about the NVIDIA example. It had a green signal too. Now, granted, it took a while to be confirmed, but once it was, that's when price moved up over 480%. Now, like I said before, this is an extreme example, and it is unusual to make this much on a green signal. However, it is not unusual to make over 30% on a green. Each of these stocks did it in less than 1 year. The green signal makes it remarkably simple to identify the right time to jump into a trade for the long term. But, long-term trades aren't for everyone. So, then we have the blue signal, identifying short-term trends. If you want a quick and easy way to find momentum trades, the blue signal is going to change the way you look for them. So, pay attention. You bring up your chart. This is Veeco Instruments, ticker symbol VECO. Apply Endeavor Blue, and when the criteria is met, a blue signal will appear on your chart, along with an alert box, again reminding you what this signal represents and to check the commentary for your trigger point. Let's bring up our commentary. If the format inside the commentary looks familiar, that's because we use the same format in every signal's commentary, so you can quickly find the information you're looking for. Right now, we're looking for the definition of blue and the criteria needed to confirm the signal. Blue signals simply need price to cross the trigger point to be confirmed. The trigger point in this example is 30.60, which I'll label on the chart with a blue line. Now, I'll get rid of the commentary and wait for price to cross the trigger point. Luckily, with blue signals, they're almost always crossed within a couple of days. The next day, price crosses the trigger point, so our signal is confirmed. It's now safe to enter the trade, and you should expect price to make a short-term upward trend. Price gets a jolt of momentum, moving straight up, making over 11% in just 7 days. Now, I don't want you to get the wrong impression. Not every blue trade makes 11%. In fact, although we know price will make a short-term upward trend, we don't know how long that trend will last. But, as you can see, most blues make a pretty good percentage, so all you have to do is hop out of one trade and into another. Although, you know what? Maybe short-term trends aren't your style. That's no problem. Then there's the black signal, which is used for identifying full rebounds back to recent highs. If you like swing trading, watch closely. Bring up your chart. This is Spirit Airlines, ticker symbol SAVE. Apply Endeavor Black, and when the criteria is met, a black signal will appear on your chart. Then, like usual, in case you forgot what the signal means, an alert box will pop up to remind you and tell you to check the commentary for the trigger point. So, I'll open the commentary, where you find the definition of black, as well as the information on how high price can rise if the signal is confirmed. Black signals only need price to cross the trigger point to confirm the signal. The trigger point in this example is 55.12, which I'll label on the chart with a black line. Now, we know this signal represents price making a full rebound back to recent highs, because that's what the definition told us. But what exactly does that mean? Well, let's start with the fact that price isn't going to move up to hit these outlier bars. Instead, it's more likely to hit our projected target range, as we described in the definition of black. So, to identify a range, all we have to do is follow the instructions and mark the two highest sets of clusters created by opens and closes below the most recent high, which I'll do with two red lines. Our top range is 59.20 and our bottom range is 58.10. We now have our entry price and our target range, so let's get rid of the commentary and wait for price to cross the trigger point. With black signals, there's really no set time frame in which this happens. Sometimes you only wait a day or two, and others it's a week or two. But we're in luck. Price only takes 3 days to cross, which means our signal is confirmed and it's now safe to enter the trade. And price should rise up to our projected target range. And that's exactly what it does, making over 7% in just 5 days. Regardless of if you call these full rebound movements or swing trades, you have to admit, that was pretty good. We knew where price was going to move up to before the movement even started. And that's it. That's all there is to step 2. When a signal appears, you can now identify the type of upward movement price will make. It's either going to be a long-term trend that can run from months to years, a short-term trend that will give you a quick pop, or a rebound back to highs. So, the question then becomes, where and when is the correct time to exit? Which brings us to Smart Getouts Step 3, identifying the right time to exit. And this is how it works. Smart Getouts provide a realistic view on where price is likely to move before an exit is necessary. Their goal is to prevent traders from overreacting to natural swings in price. In fact, you've already seen a Smart Getout. Remember the projected target range in our black signal? It told us how high price was going to rise. That was a Smart Getout, except it was located in the commentary section, and today I'm going to focus on Smart Getouts that appear as signals, early warning and exit signal. Early warnings identify when a downward movement in price may occur during an upward trend. In other words, they identify a price dip. Imagine knowing the price is likely to move down days before it even happens, giving you enough time to prepare for the movement, because that's exactly what the early warning signal does. Then, we have the exit signal, which identifies when price is breaking down, signaling the end of upward momentum. Finally, you'll know when price has finished its upward trend and is likely to make a large push down, making it almost impossible for you to get trapped in a stock as price tumbles down month after month. Early warning signals appears diamonds, and exit signals appears downward pointing arrows above price on charts. Both signals are used when analyzing green and blue movements. Now, let's see these in action, starting with the early warning signal, predicting a dip in price. If you want to be the first to know when price is going to dip during an upward trend, then this is your signal. Like always, bring up your chart. This is Boeing, ticker symbol BA. Apply Smart Getout-EW, which stands for early warning, and when the criteria is met, a signal will appear on your chart. Remember, the early warning signal appears as a red diamond. Like always, an alert box will pop up to remind you what the signal represents and to check the commentary for the trigger point. So, I'll bring up the commentary, and from here, you know the drill. You'll find the definition of early warning and the criteria needed to confirm the signal. Early warning signals need price to cross the trigger point to be confirmed. Our trigger point is 179.98, which I'll label on the chart with a red line. I'll get rid of the commentary, and all together now, we wait for price to cross the trigger point. With early warning signals, we don't really know how long it's going to take to cross. Every stock is a little different. But 3 days later, our trigger point is crossed. So, our signal is confirmed. You should expect price to begin to dip. And surprise, surprise, that's exactly what we get. In fact, price ends up dropping 2%. With the early warning signal, you don't have to be surprised by a dip in price anymore. You'll know when they're going to happen. But maybe you're looking for a signal that predicts a much larger movement down. Well, then there's the exit signal, predicting a breakdown in price. If you've ever gotten trapped in a stock that started moving down and then just would not stop falling, well, the exit signal is going to make sure that that never happens to you again. You bring up your chart. This is US Steel, ticker symbol X. Apply Smart Getout-ES, which stands for exit signal. When the criteria is met, an exit signal will appear on your chart, along with its alert box, and you know what's next. Inside the commentary is the criteria required to confirm the signal. Exit signals need price to cross the trigger point to be confirmed. The trigger point is 34.30. I'll label this on the chart with a red line, and I'll get rid of the commentary and wait for price to cross the trigger point. Unfortunately, once again, we don't know how long this will take. In this example, it takes about a week, but price does cross the trigger point, so our signal is confirmed, and you should expect price to break down. 4 days later, price has already fallen 5%. 2 weeks later, price is now down 17%. And finally, almost 2 months from the day price crossed the trigger point, it's fallen more than 42% and has entered the discovery category, which, as you know, means you can expect price to either continue to fall or begin to consolidate. Now, you might be thinking, wait, I remember when this happened, and a large part of this breakdown was because US Steel got downgraded by multiple firms in the month of April. Well, here's another fun fact. A stock that has a confirmed exit signal is over 62% more likely to be downgraded. And our exit signal was confirmed in the middle of March, almost a month before the downgrades happened. Now, I can't promise that every exit signal will predict a breakdown like this one, but I can promise that if you use the exit signal, you'll never, ever get trapped in a stock as it falls to its all-time low. We even have a saying at Simplicity that I think everyone can agree with. It's not always about how much you make. It's about how much you don't lose. And that's it. Those are the 3 steps. Step 1, identify the big picture movement. Step 2, identify the correct upward movement. Step 3, identify the right time to exit. When you put all 3 steps together, you have the Endeavor add-on for Metastock. Wow, that was a lot of information to take in. So listen, if you need a more in-depth look at anything that we just went over, check out whatsimplicity.com. Once there, click on the Tutorials tab. Here, you'll find a library of tutorial videos that will walk you through every signal. These videos are broken down into 2 main segments: in-depth, step-by-step instructions for beginners and short reminder videos. This way, no matter if you're learning about a signal for the first time, or if you just need a quick refresher, there's a video for you. Now, the moment you've all been waiting for. I know you're sitting there thinking, okay, let's get down to business, right? Come on, let's talk turkey. How much is this going to cost? Surprisingly, not that much. The Endeavor add-on is offered as a subscription service through Metastock. You can sign up for the monthly plan and pay $99 a month, or you can sign up for the yearly plan and pay $9.50 once a year, which means you save 20% with the yearly plan. And come on, who doesn't like to save money? In fact, when you break down the yearly pricing, it's $2.60 a day, which is less than the price of a daily cup of coffee. Plus, right now, if you try Endeavor yourself for 1 month, we'll give you the second month for free. If it turns out that you don't like it, then we'll go our separate ways. But I think you'll be pleasantly surprised. And if you ever have any questions, just shoot us an email at about@simplicitytradingsystems.com and we'll get back to you on the double. You know, if you don't have any questions and you just want to chat, I guess that'd be okay too.